Hello and welcome back to another episode of Engaging Conversations. I'm your host, Leon Goldsman, and each week we speak to inspiring individuals who are helping to shape stronger, smarter communities through leadership, expertise, and the kind of practical know-how that makes a real difference. This program is proudly brought to you by Nias Kenneth and the team at Invest Intelligence, visionary supporters of ethical investment and local progress. Their ongoing support helps ensure small businesses, professionals, and regional voices have the platform they deserve. Today, I'm thrilled to welcome back a special guest who truly resonated with our audiences. Erica Voelkel, financial strategist and principal at LJ Hooker Home Loans Newcastle Hunter. Erica is more than just a mortgage broker. She's a trusted advisor to self-employed individuals, entrepreneurs, and growing families negotiating finance with strategy and confidence. In this episode, we tackle the real-world challenges that self-employed people face, especially in regional areas like Newcastle, Lake Macquarie, and the Hunter. From navigating PAYG issues, business structure pitfalls, and up-to-date tax records, to assessing competitive finance products in a post-election climate, Erica breaks it all down in plain, actionable language. You'll hear how lending is changing, why planning matters more than ever, and how the right choice can mean the difference between being declined and being approved. Whether you're building your business or looking to buy your first home, this is an essential conversation filled with powerful practical advice. And just a quick note before we begin. What you'll hear in this episode is general in nature and non-intended as personal financial advice. For decisions relating to your own circumstances, it's always best to speak with a qualified professional. We're grateful to Erica for sharing her expertise, and trust me, you're going to get a lot out of this episode. So without further ado, let's get into it. So Erica, look, first of all, I just wanted to say how wonderful it is to see you. The last time you came in, you really resonated with the audience. What you contributed, we've had a lot of feedback, positive feedback, especially around the financial resume. It's wonderful to have you back.
Thank you very much. It's good to be back.
Now, for those people that haven't heard the earlier episodes, do you want to just briefly introduce yourself?
Hi, I'm Erica Voelkel. I am a financial strategist as opposed to a mortgage broker. And I have LJ Hooker Home Loans, Newcastle, Lake Macquarie and the Hunter. And we do a lot of strategic financial support and credit advice for companies, individuals, people looking to borrow for homes, investment properties, commercial developments, off the plan, superannuation, SMSF fund purchases are huge at the moment. So there's a lot of interest there and we support those purchases as well.
Erica, how important is it for self-employed people to have the financial records and tax returns up to date, especially when applying for finance?
Well, it is super important in the fact that the management of the financial documentation basically equals rate. So we have self-employed applicants that are 2 and 3 years behind in their tax. We don't encourage that, of course. Their financial statements are not there. Often a person who is fantastic at their trade lacks in other areas and they don't always understand the implications of the importance that needs in terms of finance and so forth. So we can get them finance. That isn't an issue, but there'll be financial products that are higher in rate, higher in fees and charges, and will cost them more in the long run than what it ever would have cost to keep their financial records in order. So regardless of where you stand in terms of your financial documentation, there is options available, but obviously the better you keep your records, the more up to date, the better the rate, the less fees, the easier it is to manage in the general course of your strategic planning for your business. And also when you're applying for finance, you need to understand that the funder wants to give you money. They want to do loans. That is their job. That is their role. That is how they earn an income and pay their shareholders their dividends. They're not trying to stop you. But what they are doing is using their experience in your industry. You might be applying for one loan. They've done 50,000 of these in the last 10 years. They have a lot of experience about the pitfalls and dangers. So when they're requesting information, when they're looking for record keeping, when they're looking for strategic planning or a business plan, they're doing it to support you and what you need. So they're a partner. They're not an adversary. Keeping a war chest, for instance, you need at least 6 months worth of contingency planning. If you are completely obligated in terms of business borrowing, your home loan and investment property, for instance, and something comes up, you need a digger or a grader or an expensive piece of equipment to support your business, where are those funds going to come from? Now suddenly you're starting to look at being overcommitted, taking on more work, making decisions that probably aren't in your best interest in order to meet a deadline or a crisis. So when the bank is looking for your planning, having a strategy in place, it just makes sense.
Well, it seems like a lot of people, what they're doing is actually counterproductive to their work because they're so busy trying to get a home loan or trying to get funding that they're steering them away from their business. And this is where it's really important to have someone like yourself who understands the process. So when people come to see you, how do they normally feel about getting to work with you?
It's essential to have trusted partners within your business, understanding that your expertise lies in your trade or your entrepreneurship or whatever it is that you do and are skilled at doing. So bringing on board those partners that work together, that work in synergy, because your accountant is looking for tax minimization strategy. Your accountant is looking for you to pay the least amount of tax possible. That isn't always the strategy for a purchase, whether it's equipment, asset finance, business finance, and home purchase, investment purchase. What you need to do is plan it. You can't be driving along, see a for sale sign on a commercial premises and think, that's what I need, I'll do that, let me go get a loan. Everything that you do when you are self-employed needs to be strategized. And you have a skill in your area and you need to bring on board people that you trust, that work together, that have skills in the area that they do. I can advise you on any sort of credit out there. However, I can't tell you how that works in with your financial plan. That's your accountant. Ideally, having a credit advisor, mortgage broker, finance, an accountant, and yourself in a room, having a conversation, strategically planning the next 6 or 12 months, 2 to 5 years, long term, is your best option.
Well, it can sound overwhelming for business owners who are trying to not just stay ahead of the curve, and especially in today's day and age, you've got to be ahead of the curve if you're going to survive, but also having the right partners. And then you've got to deal with things like the PAYG, the pay-as-you-go system, which was originally built around employees, not entrepreneurs. And you're probably going to see a lot of typical pay-as-you-go and ATO-related issues, especially when people are starting up. What are some of the typical pay-as-you-go and ATO-related issues you see that can trip up self-employed people seeking loans or lines of credit?
Well, the most common one that I see is when you are a director of a company, so you're not a sole trader now, you have a company, an established company, and you're paying yourself a wage. So as a director, and you're paying yourself a wage, you think that that pay slip is going to give you the credibility you need for finance. That's not the case if the business financials are showing a loss or showing, a baseline net profit, because a funder will take into account the fact that the business operations, if it ceases, so does your paycheck, which is counterintuitive because even an employed person, that business, someone working for you, can be gone tomorrow if your business fails. There's a different level of weight given to the fact that you're a director in the company and you're drawing a paycheck. So it's not always in your best interest to run your company at baseline or negative and then still draw a wage. It doesn't always work that way, and people don't realise that. The other thing to keep in mind is your regulatory obligations. If you're behind in BAS, your PAYG tax, your superannuation, any of those sorts of things, that means that there is a higher level of risk for you with the funder, because if you can't stay on top of the basic things, and that puts your business at risk, how are you going to stay on top of, personal finances, etc.? Well,
it certainly makes sense. And then the other one is, we're noticing a lot more of, is that not all industries are treated equally by lenders, especially outside capital cities. And being in Lake Macquarie and regional parts, a lot of people may not realise that this is the case. Are there certain professions like tradies, creatives or consultants that tend to struggle more than others to access finance?
I don't think it's an industry per se. It is more the demographic. So the people in the region that you're working in. If you're working in a region that has 20,000 people, as opposed to a region that has 50, 60, 100,000 people, you're a higher risk for going ahead. And again, the record management. If you have a strategic business plan, if you're showing that you have cash reserve, if you're showing that you're meeting all of your obligations without any sort of default, regardless of the industry, you are a prime candidate for a loan. So it really is going back to that basic management of your business and the location that you're trading from that are the drawbacks that we're finding. The one thing that most people don't realise now is with open banking and with the access to online everything, the tax office, your credit file, everybody has access to everything. So they're seeing things that you, even 5-10 years ago, might not note on an application because you think it's not in your best interest. They see it. It's online, they see it.
And it's not even them. It's not a person that goes through it with a magnifying glass. It's software.
It's software. It's AI. It's algorithms. Yeah.
It's algorithms. So you know the people the bank managers or the people that you see on TV that would be sitting there, the forensics, they don't do that anymore.
No,
it's all
not
computerized.
At all. Yep, that's right.
And that's taken it to a complete new level. So it does put the accountability onto the business owner as well.
It really does. You cannot hide anything at all right now and also with people making payments, they check that your year-to-date report and your pay slips match what goes on your bank. You can't, again, a low doc, or what used to be termed a low doc option, is where the accountant will say, you can meet this obligation. You buddy's an accountant. Yep, you can meet this obligation. You earn XYZ every year. And that might not be on your tax or on your returns. That will get picked up the minute there's an application submitted because the bank and the tax agency talk. So if you declare on a loan application $120,000 a year, but your last tax was $50,000, there are going to be red flags. There is nowhere to hide anymore in terms of that. The only way you can get money without that sort of scrutiny is private funding.
Yeah, and tell the truth.
And well, naturally tell the truth.
and that's the thing as well, when so many financial experts and people who promise the world, when it comes to the crunch, they don't always deliver. Just with your experience in the Hunter, Newcastle area, how have you found the shift over the past 12 months?
I think I'm seeing a lot of restrictions within the direct trades area. Everyone thinks there's a lot going on with housing and building, and there's quite a lot. But the ancillary services, one of my very good clients does steel fabrication. And he said to me the other day that they used to wait 6 to 8 weeks for something to come back from the galvanizer. It's coming back in 3 and 4 days now.
Wow.
So they're the sort of insights that you only get by talking to people on the ground, the grassroots trades people, and they're the ones that know what's going on in the immediate area. Things like that, it's just unheard of in industry. And it's not until you're talking to people or that you hear things like that you realise that there is an undercurrent of necessity out there at the moment of a lack of work.
A lot of people consume their news either from social media, clickbait, of course, or the internet in other forms. Taxi drivers, if they still catch taxis, it could be Uber. Just they get their information from everywhere, even television. You know, we see things on the news and scaremongering campaigns. So
that's why it's important to speak to somebody who understands the product offering and can meet that to what you're trying to achieve, as well as the circumstances that you're currently in, because they need to all mesh. Often you will go into your bank that you've banked with for 50 years and they will say, no, this cannot be done, without giving you a reason or an understanding as to why. But they're only saying this cannot be done for their range of products. They're not telling you there's something else out in the marketplace that will suit you, that will achieve what you need. When you come to an advisor, when you come to somebody like myself that can give you that strategic information, we can say, no, not now. But if you do this, you will get here. And it might take a month, or it might take 3, it might take 6. Or we can say, well, no, you can't do it with your existing bank. They don't offer that. However, there are funders out there that will offer exactly what you're looking for and can give that to you immediately. So unless you're talking to somebody, it's like offering, a brass or a plastic attachment if you're a plumber. You know that the same thing will do the job, but which is the best for that job at the time and long term, etc.
It kind of reminds me of that saying, when all you have is a hammer, everything looks like a nail.
Yeah.
It seems like some banks can use that approach, because they do use that approach.
Well, they do. And you're talking to somebody who isn't specialised. When you walk into a bank, you're talking to somebody who has a job to do, be it telling, although there's not many banks you can walk into now. So you might be talking to a teller who does not have specialised industry knowledge of anything outside of what they offer, and they certainly don't have any knowledge of your business.
Well, one of the things that's coming up regularly, and we see and read a lot of, is interest rates, inflation, and cost of living pressures are rising. People are more cautious than ever. They stop spending. And if people stop spending, then we could see a recession coming on. What's your advice for self-employed people who are unsure whether now is the right time to invest, refinance, or expand?
So if you're self-employed and you're not really sure about whether or not now is the best time for you to invest, refinance, expand, or take on further funding, what I would suggest is, in the marketplace, have a look at the trends. Are you in an industry that is at the moment required, needed, doing really good business? Because like everything, and like our rates, like our spending, like the economy, there are peaks and troughs. So you need to take advantage of the peak and plan for the troughs. And the same within your business. So if you are one of the businesses that isn't trending, you're in a trough and you need to navigate that appropriately. If you're in a peak, make sure that you are being strategic with the planning and understanding that a trough will come, and you need to ensure that you allow for those implications on your business and what you need to carry your business forward.
So we've talked about big banks not always understanding their customers. And we're seeing here, in fact, over in Lake Macquarie, you're right. There used to be banks in Morisset. There's none. The closest one is in Toronto. Well,
not even necessarily the branch that you use, the bank that you use. There are limited branches for the different funders.
So if I really need to go into a bank in person, and I don't really know why I would go in person anyway, I think maybe to pick something up, I've still got to drive for 20 minutes, half an hour. So it's not practical for business people to get in their car and drive when they've got other things that they need to do. And specifically talking about the many regional Australians that feel like big banks don't understand their reality. How could someone in a similar town or growing regional area level the playing field against metro-based borrowers?
To ensure that you've got a level playing field with the bigger metro areas, it comes down again to record keeping and business management. If you have a good solid structure, a great foundation for your business, you are in the best opportunity to take advantage of finance, purchases, growth. You can do that when you ensure that the foundation of your business is strong. If you know your area, you work in your area, you have longevity, and again, go to your trusted advisors, go to the partners that you include in the running and the management of your business. Ask for advice in areas that you're not skilled at.
So Erica, we're talking about trusted advisors, but if people are working with advisors that aren't so trusted and they want to get a second opinion, or they might just want to reach out and connect with you, what's the best way they can do that?
I absolutely endorse getting more than one opinion on what you want to do. Don't take the first offer or option that's given. Everybody has a different range of experience. If anyone would like to get in touch with me and have a conversation, more than happy to do that. And they can give me a call on 0428 483 444.
So I will put more details in the show notes, but if anybody does want to call, even now, and then pause, call you, and then come back to the show, they can. So what should someone look for in a property or finance advisor if they're self-employed and based outside a major city?
When you're looking to get any sort of advice, whether it's property purchase, business funding, or mortgage finance, it's absolutely essential that you trust the person that you're talking to, that there is a rapport, that there is an understanding. If there's an underlying feeling of mistrust, you're not really going to take in what you're told. Talking to multiple people will give you that certainty, I guess, that the person that you choose is one that you can work with, because in terms of finance, it needs to be a long-term strategy. It's not done and dusted with the loan that you get. There is long-term implications with your finance, and that relationship needs to be ongoing and trusted. And that is also somebody that you can see connected with the other partners within your business. So office management, accounting, those type of people.
And we're seeing so many changes happening continuously. Many people are wondering whether to buy now or wait. Is it still the smart time to invest in property if you're self-employed, or are there just too many risks right now?
No, look, property investment, commercial premises investment, it is a solid plan, an absolutely solid plan. But you need to ensure that your business is future-proof before you commit to anything that may have long-term implications in terms of cost. You need succession planning. What happens if you're taken out of the equation? Can these commitments still be managed? What if you're an integral part of the business? If the business would fall apart if you weren't there, that doesn't make sense. The funders also look to those sorts of things. They need to know that if for whatever reason there was a death in the family, or you were in an accident and you could no longer take on the role that you're doing, what would happen in the absence of you? So that contingency plan is absolutely important, both for your business and for any funding requirements, and future-proofing your business for the commitments that you take on is critical.
Doing that, taking that advice is very wise, because it also allows people to have a peace of mind. Peace of mind means they can sleep better at night.
Oh, that's absolutely correct. And being able to have your business continue if you weren't there due to illness, accident, or, a 6-month holiday in Europe. I mean, why not?
Hey, why not?
Yeah.
So we know that if people do their homework, they have a solid plan, having the right representative, having the right business partners. So behind every successful deal is usually someone who advocated hard for their client. Can you share a real example of someone who was self-employed, perhaps one of your clients, maybe from a regional or semi-regional area, who overcame finance challenges with the right support?
Let me share a story with you about a recent case study. We had a self-employed client that was facing challenges and had been for some time. This client really wanted to purchase a commercial property. They suddenly found one, a 4-unit factory bay, that would allow them to operate, lease the other units out, and it wouldn't actually cost them anything. But they could not get the finance in the first place, even with the rental return. And I've been in business for 18 years, I can do this, I can pay this. His financials were not in order. They were 2 years behind, and the 2 years that he could show didn't show a profit, even though he was drawing an income. He had 8 employees and he was in a fantastic financial position. There was just nothing he could do to convince his bank that he'd business banked with to lend him the money. So what we did, it was close to the end of the financial year. What we did is we worked out the plan, the strategy that he would need to make the repayments, what he would need to show in his business, and how that worked with the financial returns. We spoke to his accountant, we had multiple meetings, and we ensured that the accountant managed his taxation return based on the strategy for purchase as opposed to the strategy for tax minimisation, which had been his previous strategy. So now we've ensured that within a 3-month period, he put a deposit down on this property, he got a extended settlement, And within 3 months, when we could generate and lodge, because lodged tax returns are more important than draft tax returns, they can be changed, lodged his tax returns, that he then could show adequate income to support the purchase of this property.
And he got it.
And he got it, yeah, absolutely.
Fantastic.
And essentially got a work premises for free because the other 3 units paid the mortgage.
Well, that's a bargain.
It's a bargain, yeah, absolutely.
You've definitely demonstrated that behind every successful deal is usually someone who advocated hard for their client. And I'm sure you're continually doing that as well.
Absolutely. We're excited to work in the Lake Macquarie area, the Hunter in Newcastle. It is just such an amazing amount of mixed business, mixed industry, employees. Like the potential at the moment in this area is huge and it's growing. We've just taken on board a product that will do a 100% home loan for first home buyers. So you need the fees and charges, but it's incredible the space that we're moving into.
That's actually a very exciting product. Do you want to just tell us a little bit more about that?
Oh, absolutely. So this new product that we've just come across, it will allow for 100% of the purchase price. It's broken down into 2 loans. One is the 20% deposit and the second one is an 80% home loan. So there's no fees for LMI or any of those sorts of things. And the deposit loan goes hand in hand with the home loan. And eventually you sort of, as the equity grows in your home, or you pay that 20% deposit off, it's refinanced away. But the funder is allowing for that deposit, as long as you can service it, of course. You still need to be able to do that and have a great credit rating. And ideally first home buyer, because there won't be stamp duty, there's stamp duty concession. All you need are the direct costs in relation to that, which is about 1 to 2% of the purchase price of the home.
So now that's providing more young people and more first home buyers to actually get in their home.
Oh, absolutely. And self-employed. Because they've never had the ability to do it before. The rental ledger, it goes towards the savings and the history. And there are criteria. Like it's not a tick and flick. It's not easy, but it's doable. And it's doable for a lot of our customers.
Well, unless people pick up the phone and call, they won't know anything about it. So
exactly right. So
everybody out there, Erica, do you want to just mention your phone number again, just how people can get in contact?
My number is 0428 483 444.
Fantastic. Well, let me know how it goes. I'm sure our audience will, because the feedback we got from the previous podcast, as I mentioned, they said, Erica, get her back on the show. She's very genuine, very authentic, and she's got a very trusting voice. But I'm sitting with you in person, and I can say that all those things are correct. But one thing that the other people don't see that I can, you don't just sound trustworthy, you are trustworthy. And I'm really grateful to come on our program. Erica, it's always lovely to see you. And thank you for all the wonderful things you're doing in our community.
Well, thank you, Leon. It's amazing to be here, and it's amazing to get the message out so that people can hear that there are options for them. It's hard to get that message out otherwise.
Well, I think people are too busily listening to the wrong people. But the ones that are listening to our program, they're obviously getting a lot of value. And I think this is probably one of the most valuable information that they can come across. So don't hesitate. Don't wait. Another day could be another dollar.
Thank you, Leon.
Thank you, Erica. All the best.
What a grounded and empowering conversation with Erica Voelkel, a true professional who brings clarity to the complex world of finance for the self-employed. Whether you're a sole trader, business owner, or just trying to make smarter financial decisions, Erica's advice is practical, insightful, and deeply relevant, especially in our fast-changing regional economy. If you'd like to connect with Erica or learn more about her work with LJ Hooker Home Loans Newcastle Hunter, her contact details are in the show notes. Looking ahead, we have some incredible guests joining us in the upcoming episodes. From digital marketing experts and health professionals to emerging entrepreneurs creating real change in their communities. And I'm especially excited to announce the return of one of our most admired voices, Astrid Hocking. Astrid is a staunch advocate for protecting children and supporting vulnerable communities. And she's just returned from a deeply moving visit to an orphanage in the Philippines. Her passion, strength, and advocacy continue to inspire thousands, and I know her next appearance will be just as powerful. As always, I'd love to hear your thoughts. What resonated with you today? What would you like us to cover next? Please feel free to email me directly, leon@ecohq.com.au, or connect with us via social media. And if this episode brought you value, please take a moment to follow, share, and comment on Engaging Conversations, because every interaction helps us grow this community and support more local voices doing meaningful work. I'm Leon Goldsman. Until next time, stay engaged, stay inspired, and let's keep building the kind of community we all want to be a part of together.